Hello, investors. It's Don Vandenbord, Senior Portfolio Manager with Revere Asset Management. Today is Friday, November 10th, 5:05 p.m. Eastern Time, coming to you from St. Augustine Beach, Florida, with the Big Show, the Friday edition of the Revere Market Insight video, where we take a look back at the prior week, take a look ahead at what's important for next week, and we're going to go through some charts. We're not going to do a full 21 over 21, but we're also going to take a look at the RG8 and the Big 7 charts, as those are pretty critical to the success of the market going forward. So let's start off with the market state. We're in an uptrend since the follow-through day last week on November 1st and 2nd. We had a little shake yesterday on some fears of a weak bond auction, but the bulls took the ball right back from the bears today, late morning, about an hour after the close, and rallied strongly. Sorry, hour after the open, and rallied strongly all the way into the close. Definitely, in my eyes anyway, between what the markets did, the indexes and leaders, certainly adding some more confidence to this rally. Leaders still flashing green. Short term, uh, mid caps and small caps undercut their 21 yesterday. Mid caps got back above it today, but small caps, despite having a nice day, failed into the declining 21. So still on a green arrow. We've just got small caps with the one index below the 21. Very strong action from the S&P 500 and the Nasdaq 100, and that's what we weight most heavily. Over the medium term, looking at the 50-day moving average, and the long term, looking at the 200-day moving average, we've got the bifurcation that we've seen for a while. The big cap indexes, the Dow, the S&P, and the Nasdaq 100 above both the 50-day and the 200-day. Small caps and mid caps both below the 50-day and the 200-day. Thus, the neutral indication on those time frames. So, what happened today? I kind of mentioned it already. Decent open, up 0.4%, and then we just started dripping lower and lower and lower over the first hour, a little more than the first hour, and it looked like we were going to give back all the gains and continue the downtrend that we saw yesterday after 1 o'clock Eastern time. When I say yesterday, I mean Thursday at 1 o'clock Eastern time, when we saw a big red bar on the charts, especially the 5-minute chart, that initiated a harsh sell-off after a very weak 30-year Treasury bond auction. But the bulls gathered themselves right above the 43.50 level and just rallied like heck into the close, clearing that 43.85 to 4,400 resistance area that I've been focused on. Blew right through it. Didn't even really back test it much, just closing within 3 points of the high of the day on the S&P. So pretty bullish action from where I'm sitting. Here are the final numbers. Big tech led the way. The Big 7 up 2.34%. Growth stocks did fine though too. The RG8 is our 8 growth ETF composite, up 1.47%. S&P 500 up 1.56. Broad, the equal weighted S&P 500 up 1.17. When you see the Big 7 with a nice big number like this, you're going to see the equal weighting in the indexes typically underperform the market cap weighted indexes on the S&P and the Nasdaq, respectively, and that's what we see here today. Nasdaq 100 still nicely up 2.25%, equal weight up 1.79, Dow up 1.15, mid caps up 1.26, Russell 2000, small caps up 1.07, Global 60/40 up 0.73. No real help from bonds today. They prices up mildly on bonds. The TLT, the long term, up about 0.5%, so that one pulled back a little bit more. But net, the Global 60/40 up 0.73%, in-house GROTECTION up 1.51%. We'll hit the tail of the tape and some charts. Let's get right into it. We'll start off with the S&P 500 right here, and you can pretty much see from this nice big blue bar the breakout above this 43.85 to 4,400 area that I've been talking about. Let's take a look at a 30. No, mine should know better. Let's look at the 60-minute chart here. and you can see this 43.85 level that served as resistance when we were rallying up last month, and the failed breakout above there, 43.93, this day started the sell-off, big shakeout, and then FOMC here, Jerome Powell, led to a nice recovery of that. And then, as I mentioned last night, putting in a little bit of a handle. This kind of looks like an uh, inverted head and shoulders also, this being the left shoulder, this being the right shoulder, but whatever you want to call it, I call it bullish because we broke above this 43.85-ish level and closed near the highs of the week. So good stuff there. You can see on a smaller term chart here. Look at this little tiny flag here right below 43.85. Lasted about 20 minutes and then big volume buying coming in. The pullback held 43.90. And then we were off to the races. So very nice way to close the week if you're a bull. I'm sure there was some short squeezing in here based on this big. Here's this big ugly 5-minute bar on Thursday after the failed bond auction, selling off and closing near the lows, but just the opposite today, holding that 43.50 level and closing at the highs, including breaking through a key resistance level and closing above 4,400. So hip hip hooray for the bulls there. Nasdaq 100 breaking higher, continuing to show relative strength, clearing this 43.74 resistance area. Next up is to challenge is this 380.83 prior high, and then the top of this base around 388. This is a nice looking flat base here. Uh, Only 12% deep, almost 3 months long. And if you back off to the daily chart, I'm sorry, if you look at the weekly chart, you can see here this declining tops trend line within the overall flat base that we very clearly broke through today, or broke through this week with the close at the highs of the week. So good stuff there for the tech and also for the bulls. Let's go to the Dow, reclaiming that 34,000 area, bouncing at this intersection of the 21 and the 50, or sorry, the 50-day and the 200-day moving average, also closing at the highs of the week. Nice job there. Now let's go to the ugly indexes, mid cap. Uh, See the green line here, that's the 21-day moving average. Closed below it yesterday, got back above it today. We've got the declining 50-day moving average and the recent highs here. I mean, no comparison between what the mid cap and small cap indexes are doing versus what's going on in the big cap indexes, and that's because of big tech just very much leading the way. IWM small caps, here's your 21-day moving average, broke below it yesterday, undercut, rallied right up into it, and failed today. So that's the next hurdle, along with this 170 level that bulls want to see the small cap indexes get through. Let's go to the VIX. Those are the 5 major indexes. Then we always turn to the VIX back below the 15 level. Bulls like to see that. Let's go to the dollar next. So bounce off the 50-day moving average and closing, down on the day, but making highs for the week. So despite the dollar making highs for the week, stocks rallied in the face of that. How did this carry over to precious metals, which, we'd had a big inverse correlation, but not so much recently. Uh, in this time here, when money was flowing into gold, while that last leg was being completed. But we closed our gold position out today with the rollover, the 21-day moving average, closing at the lows of the week. So, gold, it was a safe haven for a while, not so much anymore. Basically, this is a failed double bottom. You can see the double bottom that's drawn here by pattern recognition. Failed breakout, and from failed moves come fast moves, and this was a ugly day down, ugly week down for the gold bulls. I'm sure they'll blame it on manipulation, but uh, whatever. GDX gold stocks never really got in gear, making lower lows, and silver SLV lows of the week also. So got plenty of ugly there. On the other hand, we don't have ugly on Bitcoin. Big move up yesterday, came off quite a bit, but another nice 2% move up today. So just like gold failed its double bottom breakout, Bitcoin consolidated. I shouldn't say just like, I'd say just opposite of what ended up happening. They both consolidated. Now Bitcoin following through to the upside. And this probably is related to, look at the big blue volume bars here too. This is probably related to the finalization of the spot Bitcoin ETFs. I saw a good, watched a good interview on somebody explaining how institutions who do asset allocation are just well, they'll have access to Bitcoin now through ETFs, and if they just put a 1, 2, 3% allocation into Bitcoin of the hundreds of billions of dollars that they manage, really trillions of dollars that they manage in people's portfolio. There's a Bitcoin has a finite number that can never be mined, and there's a halving coming, which means it makes it more difficult to earn Bitcoins and drives the value of the existing ones up. Um, but this, just looking at the chart here, this is very clearly a winner, while gold very clearly was a loser on out of these recent consolidations. Let's go to bonds now. Bonds closing up, but at the lows of the day. This is the broad bond index, TLT, the long bond, failing into the declining 50-day moving average, TYX, the 30-year yield closing on the rising 50-day moving average. So we've still got this competing moving averages, the declining 21 coming into the rising 50, and we'll see how that ends up resolving. Let's look at the 10-year. It's really the same situation. We've got the rising 50 and the declining 21. It's forming a triangle, and we'll see which way that triangle resolves. So that's our inter-asset correlation. Let's go to the tail of the tape. I'll hit the highlights here. You can pause it. After hours, futures are off just a bit. Moody's downgraded the U.S. credit rating from stable to negative, still keeping it AAA rated, but downgrading the outlook from stable to negative. And futures were up minor. They're just down slightly after this. We'll have to see if this is another headwind for the markets next week. We know we've got plenty of headwinds, but we're still operating under the bull case since the 11-1, 11-2 follow-through days and the follow-up strength today. All 11 S&P 500 sectors higher, led by semiconductor, software, and XLK tech, including the big tech. On the downside, the dollar, gold and silver stocks, and solars. In-house, we bought NVIDIA. I've been wanting to get this, and we sold DEC in order to buy it. I don't like to own not more than 10 stocks. Buying NVIDIA put us right at 10. And I used some offensive selling rules to take profits in DEC today. We'll take a look at the charts here momentarily. We also, as I mentioned, sold gold. This took our beta up a notch to 1.31, but the bottom line for the week, the bulls retake control. Bears had it for like 2 hours yesterday, 3 hours yesterday after 1 o'clock. Maybe held it for the first hour today after the gap up and the sell-off, but an abrupt about face around 10:40 Eastern time this morning, 5.5 hour rally into the close. Pretty impressive if you look at it from this standpoint here. So again, the move down, looking like we're gonna follow it. The market is just a fascinating mechanism, and then just slingshotting to the upside. So let's take a look at a couple of charts here first. So DEC, why did we sell DEC? It was a canary in a coal mine. It broke out before the market had its follow-through day. It's putting in this nice little tight shelf here on declining volume. Uh, a couple of reasons. One, it's extremely extended on the 21-day moving average, and it's just riding between the +3 ATR and the +4 ATR higher. And I wanted to free up some capital to buy NVIDIA. And I picked this, and also this is day 10. There's some studies, from some gap studies that we participated in. Day 10 after the gap up is a typical spot for a pause to happen. Maybe the strength of the market will carry this through to a breakout. That's fine if it does, but we decided to book the gain on that today and take a position in NVIDIA for clients that didn't have it. We had some taxable clients that we didn't want to pay the taxes on by booking the gains as they were over 50%. They're now up over 75%. But very nice double bottom base here. Obvious relative strength, money flowing into semiconductors this week. One day of a negative reversal and then breaking back through this 476 pivot. We bought a 3% size here. I already mentioned why we sold gold. Nice performance from most everything that we have. The only laggards being Celsius, which is trying to decide what it wants to do, still holding the 21 after its earnings with earnings report with just fantastic fundamentals. And also Lilly trying to decide if it wants to go higher also after getting above the 600 level on big volume and then pulling back yesterday, but still holding the 21. So those are really the only weaknesses in the stocks that we own. I'll go through the rest of them quickly. CCJ closing near weekly highs. CrowdStrike, same thing, closing near weekly highs. In fact, making a higher at the high of the week. Netflix continues to chug higher. This is our largest position. Nice candle today, up 2.8%. Meta, META, closing at the highs of the week. Amazon closing near the highs of the week after a 2-day pullback. Let's see what else we got. The Bitcoin, we talked about that. That's everything. 9 positions. The Bitcoin ETF and 15% T-bills and about 15% cash and the equivalent of 50% via SPXL in the long S&P 500, which had its breakout today. So that's the portfolio. Now let's take a look at we just hit most of these. Let's take a look at the rest of the big 7. We hit Amazon, Microsoft, and Meta. Let's take a look at Apple. Apple supposedly with a bad earnings report that lasted one day. Next day made a new high, a new relative high, and then even on a relative strength basis, it's continuing to go higher. So that's really helping out the indexes. Google right at a resistance area here, the second weakest of the big 7. Into the declining 50-day moving average, and Tesla the weakest below the 200-day moving average. We showed Netflix. I also like to keep an eye on Snow and AMD as those are part of the FANG Plus index. You can see Snow. This gap up here was on some other cloud stocks having good earnings on Tuesday. It's consolidating that gap up and not giving it up. And then the 10th, Netflix is the 9th and the 10th is AMD with a nice breakout here. Also have my eye on this one, but we went with NVIDIA this morning. Let's go on to the RG8, and these are a little bit of a mixed bag. Obviously, with the weakness in the small cap indexes, you would expect some weakness here in IWO, and that is what we're seeing. It's lagging on a relative basis. Right below the 21 looks a lot like the IWM, but a break above this declining tops trend line would be a bullish outlook for small cap growth stocks. SLG, very similar situation. This is the S&P 600 growth proxy, and it did close above the 21-day moving average. MDYG, a little bit healthier, looks a lot like the mid-cap stocks, back above the 21 today. QQQJ, this is a pretty nice consolidation here after its move up. So note that this is tech-centric, and obviously it's a mid-cap tech 100, but consolidating nicely, not going, no declining tops trend line there. It's really a shelf as opposed to the declining tops that you're seeing in IWO and SLYG. Next up is PDP. This is a momentum Dorsey Wright index, and that looks fantastic. SPHB high beta from the S&P 500 forming a nice little shelf here also. FFTY, this is the IBD 50 breaking out above this 21-day moving average. And ARK-K, I mentioned about how I punted this yesterday. Uh, just really don't like the holdings in it. We'll keep an eye on it to see if money flows back into it, but a little bit of a pullback from this shelf. So it looks a little bit better than IWO and SLYG, but not as good as the other six components in the RG8. And let's take a look at some standouts today. App, big shakeout yesterday in earnings, but money flowed back into it today, up over 10%. LNW, former 2121, big breakout from this cup and handle base on earnings. And AFRM, the complete opposite of what you want to see after earnings gap up, uh, broke out yesterday, fell back into the base, down 9.8% today. This is not very clearly not what you want to see from your breakouts. Palantir had a nice day today, breaking out from its flag with relative strength at a new high. We're seriously looking at this one to add it to the portfolio too. And then the two other that I am keeping a close eye on, Uber now breaking out decisively from its double bottom base, and Datadog just looks really good too. 4-day consolidation here after its earnings gap up. And we'll give you one more. DraftKings pulling back after making a 4-day higher high after its earnings report, pulling back a little bit into the top of the base. And that's going to wrap it. As always, like to hear from you. The email's don@revereasset.com. The phone's 855 Real Wealth. That's 855 732 5932. If you're interested in becoming a client, email my partner, Dan Stewart, dan@revereasset.com. Appreciate everybody with the likes on YouTube. Feel free to leave a comment. I reply to all of them. And check out our podcast, which is out there now on YouTube. If you're on the email list, the email will get sent out Saturday morning. And with that, I'm going to wrap up the video for the week ending 11/10. This is Don Vandenbord with Revere Asset, telling it like it is. Thanks for listening and have a great weekend. And happy Veterans Day, too.